Hello and welcome everyone to AUM Finance Podcast. This podcast discusses the first principles of investing and is for informational purpose only. We intend to add to the body of knowledge. Please consult your financial advisor before taking any investing decision.
Hi everyone, this is Chaitanya and I welcome you to the AUM Finance Podcast. Has anybody ever defined the term investing for you? We are launching this podcast with a very basic but important topic, investing versus speculation. And we shall be picking Nirav's brains on what exactly is investing and its definition, and also what it's not. Like we shall learn to differentiate it from speculation. So let's come to our point about this word called investments.
Okay.
Now, this word has many different meanings for the people who don't know, who are starting out.
Yeah.
Some people think that saving is investing.
Yeah.
And not just saving in the bank. They think that keeping the cash at home is also saving. Then there are people who think that keeping the cash in the bank balance is investing. Then this is investing in debt funds, then equity funds, mixed funds. Then there are people who think trading is investing.
Yeah.
And some people don't know the difference between speculation and trading, gambling and trading.
True.
So let us take these different words and try to get clarity about what are these different words, not so much to go into what are they,
True.
but what is investing and how is different from extremely safe saving.
Yeah.
And extremely risky or foolish things that people think. It maybe gives them a sense of dopamine that they've earned so much and they get addicted because gambling becomes addictive at a certain point of time.
Yeah.
So it's the dopamine thing.
Yes.
But so what are these differences? How do we tackle it? Let's go step by step into.
Okay. So let's go first to what is saving and what is investing.
Okay.
Now, I don't think there's a textbook definition of the difference between saving and investing. And people associate the two together wrongly, according to me. So I come out with my own definition of what is saving and what is investing in the Indian context. And I think same can be applied in the US and the Western concept also. So I believe in India, anything that helps you give you a return which just matches the inflation rate in the country. Okay, that is saving.
Okay.
Right? Or if your returns are less than inflation. Again, I am saying, let me give a caveat. Okay, I am not an expert on this subject. I'm just thinking loud.
Yeah,
right?
Naturally.
So when you came to me as a client, you were a very good saver. Right?
Right.
You saved a lot. You are not a spendthrift. You're a very good saver. Okay. You kept saving money, but you never invested aggressively. And why you never invested aggressively is because you didn't know where to go. So people, whenever a new set of clients come to me, they're all over the place.
Yeah.
You invested X amount here, Y amount in there, Z amount there.
Correct.
Because we don't have a direction.
Correct.
And my job is to show you the path and give you the direction.
Correct.
So most Indians, by their very nature, especially, I can't say them that for the next generation. Okay, but most Indians, people who are in their 40s, people who are in their 50s, they're very good savers. Because we've come out of India over the last 3-4 decades has come out of poverty. Okay, very few of us can claim that our grandfather were very rich.
Yeah.
Okay, they struggled, passed on the wealth to the next generation, to our fathers, and then it came to us. So we've seen bad times. We've seen our parents and grandparents struggling
And the lack, basically.
Yes, we've seen the lack. We've not seen prosperity, what the current generation is seeing.
Correct.
So anybody who's seen a lack is a good saver. But saving can only take you this much.
Correct.
It can never make you wealthy. Right? So what our grandparents did and what our parents did, there was this lady from post office who would come at our house and collect some money from the mother, from the lady of the house, and put it in something known as a post office RD.
Recurring deposit.
Okay, recurring deposit would give 8, 9, 10, whatever percent it used to give at that time. Okay. So that was a good habit. That is saving.
That is
Okay.
Yeah.
Then as banks...
It was a no-brainer
Hmm.
because people didn't need to understand where their money is going. It
Yes.
would just go to the government
Yes.
of India
Yes.
and it was safe.
And let me go one step behind. What did the lady of the house do at that time? What my grandmother did. And in fact, it saved us. So
They used
that story for some other
expenses.
So coffee can, what the Westerners call coffee can. So our grandmother had these jars and all.
Yes.
Okay, in the kitchen there would be a small tin box, right? Empty tin box where they would, what would I say, stash away some cash.
Correct.
Okay, the husband knew about it. The husband would give to the wife some monthly budget. And it always used to be tight. But the lady of the house was so suave, so, perfectionist in managing the household budget. She would always cull out some money out of that.
Correct.
No matter how tight the budget. Remember, very carefully, listen very carefully. I'm talking about a generation where the expenses were always more than income. So anybody who is a Gen Z today, if he or she is listening to me, they will not be able
They can't imagine.
They can't imagine that situation. That was a time when expenditure was always more than income. Yet the lady of the house would cull out some money from the monthly budget every year and stash it away in a box, either under the mattress or some place else. One difference between saving and investing, according to me, based on what I have understood, is saving is putting money under the mattress, putting money in a current account, putting money in a saving account, putting money in any traditional form of investment, may it be insurance plans, where whatever return you are getting is equal to or less than the rate of inflation. कुछ पैसा साइड में रख दिया है, एक वेल थॉट ऑफ प्रोसेस नहीं है, ठीक है, और आप इन्फ्लेशन को बीट नहीं कर रहे, तो परचेसिंग पावर को प्रोटेक्ट नहीं कर रहे. दैट्स माय डेफिनेशन. आई डोंट नो वेदर देयर इज एनी टेक्स्ट बुक डेफिनेशन ऑफ सेव.
मतलब basically the value of money remains the same. Whatever.
Or less.
Or does it going down? Or more or less.
Doesn't increase the purchasing.
Correct. Doesn't increase the...
And you are not compounding. That's my definition again. Investing is only and only if you're compounding your wealth. That is investing. Okay. Now, so that I've addressed the difference between saving and investing.
Got it.
So Indians by nature, here though, and let me differentiate between people who are in their 40s, 50s and above. They have been very good investors all along.
They've been very good savers.
They have been very good savers.
Yeah.
They've not been very good investors.
Correct.
One metric I can give you to justify my point is I believe only 6-7% of Indians invest in equity, either directly or via mutual funds, indirectly, or in any other way, right? Equity in India has compounded wealth at, let's say, 12-13%, okay, on a total return investment basis over the last 4-5 decades, and yet see the number of people who are coming here. I mean, you and I would believe that mutual funds are popular, but can you imagine what percentage of population we've reached? It's in single digits.
Right.
So Indians have been, one asset class that they've taken to is gold as real estate.
Correct.
Okay. And gold, to my surprise, and we'll have an episode on
because it is something tangible.
Yes.
You can hold gold.
Yes.
You can see the real estate, it's my land.
Yes.
But when you buy mutual fund or shares, it's just a paper.
Yeah.
And you have to understand that you're buying a running business.
Yeah.
That is very difficult to understand.
Yes. So people are now taking to it. So we've been very good savers, okay, and not very good investors. So investing is when you start getting returns which match or exceed the rate of inflation, when you not only maintain the purchasing power of your money. Now, inflation in India, I would say, over the last decade, it was in 6 to 7% range. And in the coming year, RBI has been given a mandate to have an inflation controlled within 4 to 6%. But then the real life inflation is not what the Reserve Bank of India publishes. Okay, the real life inflation is way higher than that. Like for our children are in school, right? So our school, my children's school says we shall increase the fees by 10%. Now imagine I am an FD investor, a PPF investor, and mind you, I'm not saying these are bad investments. They're not investments, they are saving instruments. If I keep all my money in an FD and my child is studying in a school where the fees are going to be increased 10% every year, if my child is in 4th standard today, imagine what my fee would be in the 10th standard.
Exactly.
Right? So I have to go more from saving to investing. I see that wave coming in India, but we still have to teach people about that. So investing is when the purchasing power is either maintained or increasing over a period of years.
Yes.
And that is the only way you can ensure that you become rich. You're richer a decade later than what you were today.
Correct.
With the same amount of income, assuming that your income doesn't increase. So that's where I answered your first question. It was a very long answer.
Yeah.
Okay. So this is the difference between saving and investing. Now, investing has been defined. So my guru, Warren Buffett, has an own guru, Ben Graham.
Yes.
Ben Graham wrote 2 books which changed Warren Buffett forever. And when Warren Buffett talked about those books, it changed me forever. Okay. So the first book that Ben Graham wrote, was a book known as Security Analysis. And in that book, Security Analysis, they would define what investing is. So investing, according to Warren Buffett and his guru Ben Graham, is laying some amount today in order to get a bigger amount in future.
Okay.
And in some definition I've heard, there's a advanced version of that investing is letting go of purchasing power today. So let's say I have $100 in my pocket today. Okay. That $100 can buy me whatever it can buy. 5-10 years later, it's not going to buy me. The purchasing power is going to reduce at the rate of inflation. So if I invest that money in such a way that I get, let's say, 110 rupee worth of purchasing power 10 years down the line, then I am an investor. So investing is laying some amount today in order to get a bigger amount tomorrow. Right? Now, what is speculation then?
Yeah, then we come to the next one. Trading, speculation, gambling, of course. Yeah.
So trading, gambling, speculation, let us all bucket it into one word: speculation.
Okay.
Now, most investors, and I should not call them investors, most traders and speculators, when they bet, investor never bets, he invests. A trader or a speculator bets.
Okay.
And the moment you say bet, and they do bet, most people in the stock market don't invest, they bet.
Betting, I think I would define it as predicting the outcome.
So when you bet, you let's say you buy an asset class at a certain price, and if you are betting your money, you are predicting on the future price of that particular investment. Let's say you buy a stock today.
Correct.
And the bettor, the speculator or the trader is expecting that the price of that share is going to go up.
Correct.
Okay. And that is the only thing he's concentrating on. There's nothing wrong with that.
Correct.
Even an investor buys a particular stock today so that he gets a better price tomorrow.
That's where technical investing, etc.
Yeah.
I mean, they try to predict.
And that is the reason I am not a big fan of that subject.
Yes.
We'll talk about it in some other day. So, but a speculator is only expecting to get a better price tomorrow. So isn't that a greatest fool theory?
Yeah, true.
I am buying at X price so that I know tomorrow you'll buy it at X plus Y price.
Correct.
Okay. Now, who are we to say that it will trade at X plus Y? It can also trade at X minus Y. So what are cryptos? Now, what is investing? Let me come back to it. Investing is I buy an asset. That asset has a cash flow. And I'm expecting, let's say I buy a stock today, with a market cap of 100, with a turnover of 50. I'm not saying any units here. So 100 units, 50 units, with a profit of 10. Okay, so I bought a stock at a P of 10. Okay, I expect over the next 10 years, the company should grow, the underlying company, underlying business behind its stock. And let's say 5 years later, the turnover increases from 50 to 100. And the profitability increases from, if it is good, if my bet is right, from 10 to not 20, but 25. And then I am assuming that if a company was available at a market cap of 100, when the profit was 10, and if the profit goes to 25, the market cap should at least be 250.
Correct.
And that is why I make money. And you do not buy with the intention to sell. You buy for the cash flows that you get. And as the business increases, the cash flows increase for the business. And as a result,
the
valuation increases. Because the only thing in your control is to estimate how the business is going to do.
Correct.
Who are you to say? And there have been examples when the business and the company has done very well over a very long period of time and the price has not moved. But eventually it does. Market is a very powerful... market recognizes the growth and it gives. So this is investing. What is speculation? Something doesn't have... So if you bet on a casino, if you buy a crypto, okay? So when you buy a crypto, when you buy any cryptocurrency, may it be Bitcoin or anything else, though there's no cash flow, there's no underlying business. So what are you are speculating that somebody, a bigger fool, will tomorrow buy it at a higher price from me.
Correct.
So it is only a game of perception.
One question which is popping up in my mind is that there are many people who are small to medium businessmen.
Yeah.
Small to SMB, what are they called? SMEs.
SMEs, yeah.
Small and medium enterprises.
Yeah.
So, what would you like to say about them? See, they are also investing or putting in some money in their business, whether it is trading or whether it's their small business.
Yeah.
They may be having some production unit, export unit, etc. So these kind of people, they generally think that why should I just invest in stocks?
Yeah.
I mean, let us say I've got an X amount. So I want to apportion some money in stocks, mutual fund. Suppose they want to take your, come and invest through you. And conversely, I have my business wanting funds.
Yeah.
So what advice will you give them to a business owner who is doing well, to a business owner who is doing so-so, or to a business owner who is struggling or not having a good phase in his business? So I want
tell me one thing. Isn't a business owner an equity investor?
Exactly. That's what
you have a small mom and pop business. Okay. A business owner, you gave an example of a business owner who doesn't have any investment in equity because he's more attuned to investing, either buying gold or real estate. So I just met a very prosperous jewelry shop owner.
Okay.
That guy has 3-4 jewelry shops, and he's risen from a very normal background.
Humble backgrounds. And what we talked about. Yeah.
And then I said, sir, what is your area of investment? Are you an equity investor? He said, no. I said, sir, you are an equity investor. You happen to be in a jewelry business. You are 100% equity owner of your business.
Exactly.
And let me tell you, just make a list of the 10 most richest people in the world or 100 most richest people in the world. They are all equity investors. Even if an Elon Musk has never invested in a business outside
his own.
Yeah.
Yes.
But based on Tesla, right? Based on SpaceX, 3, 4, 5 years, I think floated around 6, 7 businesses in his lifetime, right? He owns most of those business.
Correct.
Now he has divested and then it will become public company.
Right.
So he's an equity investor.
Correct. Got that. Yeah.
Doesn't matter whether he's invested. So the only thing I tell these people is, why benefit only from your own business? When you buy something like a mutual fund, right? You're buying a bouquet, okay?
Diversification.
Basket of 40, 45 great businesses in the country, which has been well chosen by a group of people who are much more qualified than you and me and that person. So if you think you can make it good in this world, there are other people who are equally capable or more capable than you.
Correct.
Hence, you should invest in equity outside of your business.
Right.
And the rule, right? What rule I have? If you are from an X business, I make a portfolio where you are not exposed to that particular business. So I'll not give a titan. I'll not give a titan to a jewelry owner.
So that manages risk very well.
Yes, that diversifies
ups and downs of the industry.
If you are into cement, so one of my client is a very big cement distributor pan India. Okay, so if he's, I don't give stock advice, but if he asks me for stock advice, I'll say stay away from cement stocks. But you know what the irony is? Most of these people only invest in their own sectors.
Because they feel comfortable. They have
because they know that it is their circle of competence.
Yes.
Right. Acha, investing, I wanted to, we were just on the subject of investing. So one, I said investing is laying more money today in order to get more money tomorrow. There's an advanced version of this, what Warren Buffett has said. Investing is letting go of a purchasing power today.
Yes.
Okay, in order to get, so if you don't invest, you have $100 in your pocket today. If you don't invest, okay, then $100 can help you buy something. But investing is laying off the purchasing power today in order to gain more purchasing power tomorrow.
Okay, so that's delayed gratification.
That is delayed gratification is very important in investing. It's like growing a mango tree. So investing, especially equity investing, is like growing a mango tree.
Correct.
So my farmer friend tells me it takes 5 years for the first mango to come, right? Now, if you grow a mango tree, if you plant a mango seedling today, you keep on watering it, you keep on giving it fertilizers, and every morning if you come, it's like, when we grow a few flowers in our garden, my daughter would ask me, so I don't see the flower. She was gifted a small plant by a school teacher, and she would water it every day, and she said, nothing is coming up. First day, second day, third day, first week, first 10 days, she would wake up and see, it's not cropping up. And then we have to tell them, look, the seed, something is happening inside that you and I are not able to see.
Not able to see right now.
Okay. But one day the seed will turn into a small, tiny plant.
Correct.
And in sometime in future, if you take due care, it is going to turn into a tree.
Right.
That is the best example of power of compound.
Absolutely.
That is investing. Okay.
And it takes a hell of a lot of time for that gestation period where you're putting in the efforts.
Yes.
But you're not seeing results.
Yes.
So that's the area. I think it has a term. It's the area zone of patience or something. There's a term for that.
Yes. And then there is an example of a bamboo tree. So a bamboo plant, for years together, I'm told, doesn't grow.
Chinese bamboo.
A Chinese bamboo. So there's a story of a Chinese bamboo.
Yeah.
A Chinese bamboo for maybe decades don't grow. And then when they start growing, they multiply.
Yeah.
Right? Like, so what wish I give to all my clients on their birthdays? You remember that?
No.
So the wish I give, so the wish I give to all of you is let your well compounded geometric progression in years to come.
Yeah.
I'm in love with geometric progression. The day I studied that subject in school, I have fallen in the power of compounding. Okay. So let your wealth compound at a geometric progression. The Chinese bamboo tree is a good example of that. For decades, nothing happens. People who don't have patience get frustrated and leave it then and there.
Exactly.
Okay. They go to a next crop. But when it starts compounding, it doubles in a couple of days. That's what they say in height.
True.
That is what investing.
So
investing is a very patient activity. People who are not patient, if you invest in a stock or in a mutual fund or in real estate, and if you want to check prices every other day, every other week,
then
that is not investing.
So
then you are a speculator.
What you're saying is people give that kind of patience to gold and real estate. But when it comes to equity funds, which is a liquid fund, that's, I think, one of the disadvantages. It should be locked away.
And there's one more definition of investment. An investment operation is one which upon thorough analysis, promises safety of capital and an adequate return. I'll repeat. An investment operation is one which upon thorough analysis promises safety of capital and an adequate return. Anything not meeting this criteria is a speculation.
Oh, okay.
So if you don't do a thorough analysis, tell me how many people you know in your circle, in your friend circle, among your families, who put in money somewhere. So I'll not use the word investment. They've deployed money somewhere. And they've done a very thorough analysis before they've done that. What percentage of?
Not many.
Not many, right? Okay, so the thorough analysis is missing. Have they ensured safety of that capital? So beyond a point, you cannot guarantee safety. But have they taken pains and done the homework to ensure that I'll not, Warren Buffett's rule number 1, don't lose capital. Have they done that analysis?
Care. Have they given care?
Have they given enough care? Have they talked to enough people?
Correct.
Have they done their own due diligence? Whether it is real estate, stock market, mutual funds, gold, anything. Have they done the study? No. So no thorough analysis, no safety of capital. And an adequate return.
Most of the decisions, what I've seen with myself also and with people around us, done due to media pressure.
Yeah.
Sometimes the media creates a hype around certain investments. Like a few years back, something had happened with silver. So people had just purchased silver when it had gone to 70,000. Now it is hovering around.
And I can give you data after data after data where I can tell you that most asset classes. Now, for a layman, let me explain the term asset classes. Anything where you invest is an asset class. So if you buy stocks, your asset class is equity. If you buy equity mutual fund, your asset class is equity. If you are a private equity investor, your asset class is equity. If you buy real estate is an asset class. If you buy gold is an asset class. Okay? If you invest money in an FD is an asset class. So these are different asset classes. Why I explain this term is in my podcast, I'm going to use this term again and again. So people should know what an asset class is.
Okay, Nirav. Yeah. One question, like we've just broached upon the topic, of course, very superficially, a little bit depth about investment and savings, etc. But see, the Nifty is trying to touch 20,000 right now. And it's right now at an all-time high.
Yeah.
It's waited for about 2 years over there at that 18,000, 15,000 range. And it has just broken that.
Yeah.
So is it a good time to invest or this common question because people who have
I'll
surplus.
So I'll stop you. I'll stop you at that spot.
Yeah.
You know my answer. See, in terms of your age, are you at all-time high today?
Nobody knows.
Yes. No, you are at all-time high.
Yeah.
You are never older.
Yeah.
Yesterday you
Correct.
you were one day younger than what you are today. Okay. So
Everybody's at an
so one of the dumbest question. I mean, no questions are dumb. With due respect. Okay. So don't make your judgment based on all-time high. Okay. Doesn't matter. And we'll not talk about where the Nifty is today. As I said, this podcast is about. But then since it has come in your mind, it's a relevant question. Every day that we are growing, we are at all-time high.
Correct.
But aren't we growing very well?
Correct.
Either physically or in terms of wealth or in terms of career and all. Okay.
So should PE be the deciding?
The valuation should be. So I'll tell you, I read a metric today morning. Okay. And I was just going to share it in the group that I run. That compared to 18 or 24 months back, we are 20% cheaper today.
Compared to
18 or 24 months back, we were much more expensive 20 months back, 24 months back than we were today in terms of valuation. So what price you are paying for what earnings?
full value. Correct.
Last 2 years, last 18 months, the market didn't go anywhere. And we are coming to market, right?
Yeah.
Okay. So that this podcast is an ephemeral and a everlasting podcast. So we'll not talk markets here, but no. So do not go by the metric all-time high. So whenever even gold keeps on touching every 3-4 years all-time high. Even property prices go all-time high. India's GDP is at all-time high. Does it mean India is not going to grow?
Yeah.
In fact, there's never a better time for India than today. Okay. The world GDP is at all-time high. So let me, what do I say? Let me break this myth of all-time high. Never go by that metric. That helps you arrive at no conclusion whatsoever. Don't go by all-time high. We are every day at all-time high. And we are doing better and better with the experience we've got, with the knowledge that we have got.
But still, let us say there is a person who has some sum to invest.
Yeah.
And it is today. So there is that doubt in his mind.
So I am getting more profits today
That why
per unit of
if
India.
I wait for a month,
Yeah.
and if the price goes down,
Really.
will I won't I get a better deal?
So predicting the market is like predicting your better half's mood. Can you do that?
What if the market goes higher?
Stop predicting.
Correct.
So investing in speculation, I gave you the difference, right? I gave you the difference. That's a speculator only looks at this price. That is the only criteria he looks at. And that is the only thing not in your control. Right? The future prices are not in your control. Ages have gone. People have come and gone. People have tried to predict the market levels. They've been shocked. COVID taught us. A very recent example is COVID. Even before COVID, every 3-4 years, the market surprises us. And the surprise is sometimes negative and sometimes positive. So one thing that I know, and I'll tell you one of the first principle in this podcast today, besides giving you a differentiation between what investing and speculation is, let me give you one first principle. Know what you don't know. Okay. We talked about Charlie Munger. If you know what you don't know, okay, and if you are aware that I don't know this, you will not make a blunder.
Oh,
yes. So I don't know where the market would be 3 months, 6 months. So I just got a call yesterday. I have 1 crore to park. Okay, I have 1 crore rupees. Park is my word. He or she didn't use the word park. I have 1 crore. I don't need it for 6 months. Wait, what to buy in the market? And I said for 6 months, unless you give me a 3-year horizon, I'm not even going to look at the equity markets. Okay, and that person said, why not? I said 6 months, anything can happen. 1 year, anything can happen. 18 months, anything can happen. Once you cross 3-year hurdle, 4-year hurdle, 5-year hurdle, then I can say with some sort of surety what is going to happen in the market. So one all-time high is the biggest myth ever. We are at all-time high every day. Okay. Indian GDP is at all-time high. And I hope it keeps on going at all-time high for decades together. My wish for my country. So does it mean you don't bet on India? There's never a better time to bet on India than today. We are already late in the party. This is one of the best economies you can think about, right? From all parameters. Just because it is at all-time high, just because we are $3.3 trillion economy, and we've never been 3.3 trillion before, are you not going to bet on India? So that fact itself tells you, right, that you should not look at all-time highs. These are only statistics.
Right.
Be aware of them and then forget them.
Can I just ask a very small side note kind of a question over here, even though it's related?
Yeah.
Somebody who may have a 3-year plus horizon.
Yeah.
How do tax-saving investments compare to normal ones? Suppose a person doesn't have the need to invest in tax-saving. Even then, isn't a tax-saving investment a better investment?
No.
So you're saying if there is a need for tax...
In the only objective of investment is to get more purchasing power in future than what you've got today. So if tax is going to lead you to buy an investment, then it's like putting the cart before the horse.
Okay.
Remember, never put the cart before the horse. Investing is buying more purchasing power in the future than what you've got today.
You're coming back to the first...
I am coming back to the first principle. So people who listen to me may find it very boring.
No.
But these are very, very basic thing that I need to repeat. Okay. But if there are two instruments, everything is similar. I already decided I want to go for an equity investment. And if I also happen to save tax, nothing wrong with that. So other things being equal, amongst all the tax saving investment, I would prefer a tax saving mutual fund, also known as an equity linked savings scheme. Any time better than a PPF, which is the second best option, or any other traditional investment. 5-year bank FD is a complete waste of your money.
Correct.
With due respects, okay? Unless you are in a particular age group and you cannot look at equity at all. Okay. So, but just buying an instrument to save tax, and many ultra HNIs in India do that, just putting their money only to save tax. You're putting the cart before the horse. Never do that. First, decide on merit that you want to be there.
Correct.
Then, if it helps you save tax, do that.
Is
it clear?
Yeah, I got it.
Okay.
Got it.
Fine. Yeah. Fine. Awesome.
Thank you for listening to the AUM Finance podcast. Remember that all investments are subject to market and other risks, and one should read offer docs and other documents carefully before investing.